So let's go ahead and take on an example on accounting standard number 28 on impairment of assets. And also there will be some portion of accounting standard number 10 being tested. Is that fine?
Yes, sir.
Now let's go ahead and take on this example from the May 2016 CA final RTP on accounting standard 28, and now these sums will be asked in CA inter exams, right?
Yes.
Now let's go ahead and take on this question. Yes, Renuka, read the question for us.
On 1st April 2008, C Limited purchased an asset for rupees 10 lakh with an estimated useful life of 10 years. The machine is depreciated on straight line basis. On 1st April 2011, the asset was revalued to 8,40,000 and the surplus arising out of revaluation being credited to revaluation reserve.
Now listen, your company purchased an asset for rupees 10 lakh on 1/4/2008 and having a 10-year useful life with no salvage value given in the question, right? And the company follows a straight line method of depreciation. Now what I can do, 10 lakh rupees divided by 10 years life, rupees 1 lakh is a depreciation per annum, right? Remember this number, 1 lakh rupees annual depreciation. And after 3 years, on 1/4/2011, the asset is revalued. That means a company follows a revaluation model and not cost model for this asset. Is that fine?
Yes.
Now, what is 10 lakh minus 3 lakh is rupees 7 lakh. And guys, as I speak, you can also make some running notes. In case you're watching the video, please make some running notes in your notebook. Is that clear?
Yes, sir.
So, what is 10 lakh minus 3 lakh? 7 lakh is supposed to be the book value. But what is the technical term? It's called the carrying amount of the asset after minusing the accumulated depreciation for 3 years. Because 7 lakh is supposed to be the asset's book value as on 31/3/2011. Or I can say 1/4/2011 when the asset is revalued. Is that clear? And this 7 lakh rupees asset is revalued to rupees 8 lakh and 40,000. So what is the revaluation increase? Is 1 lakh and 40,000, 140K. It is 140,000. Rupees 1 lakh 40,000 is an increase in asset value. And you all know this from accounting standard 10, the knowledge brought forward. This 1 lakh 40,000 should be credited to which account? Revaluation reserve, or you can say revaluation surplus. Is that fine?
Yes,
Next.
sir. So, during the year ended 31st March 2014,
Another
the
3
asset
years.
was reviewed for impairment and recoverable amount of the asset was ascertained to be only 4,30,000.
That means what? From this 8 lakh and 40,000, the revalued amount, you got to subtract depreciation another 3 years. Now tell me, out of 10 years, 3 years are over, right? Already. Now 7 years left. Now tell me, what is 8 lakh 40,000 by 7 years? It will work out to 1 lakh and 20,000 depreciation per annum, which is 20,000 more than the earlier depreciation. Remember?
Yes, sir.
But anyway, don't bother about currently. But right now, 1 lakh and 20,000 is the depreciation per annum from 2011-12 until 31/3/14 when the asset is tested for impairment. Now you check this. Now what is 8 lakh 40,000 minus 3 lakh and 60,000? 1 lakh and 20,000 into 3. Now guys, please use a calculator as I speak. Please do some accounting. Is that fine? Some kind of mental accounting, or you use a calculator. 8 lakh 40,000 minus 3 lakh and 60,000.
4,80,000.
4,80,000 is supposed to be the assets carrying amount on 31/3/2014. On this day, the asset is tested for impairment. Now, you all know from accounting standard 28, we are supposed to compare this carrying amount with something called the recoverable amount, which is only 4 lakh and 30,000. That means 4,80,000 minus 4,30,000, 50K. Rupees 50,000 is impairment loss. Is that fine?
Yes, sir.
Let's come to the accounting for that later. but impairment loss is 50,000 on that date. So what is 4,80,000 minus 50,000 loss written off? Is 4,30,000 will be the revised carrying amount of the asset as on 31/3/14 after impairment. Is that clear? Another 4 years left in the asset. Yes or no?
Yeah.
So what will be 4,30,000 by 4? Will be 1,07,500 will be the annual depreciation going forward. Next.
Next year, there were some favorable changes in the market condition and the recoverable amount of the asset was reassessed at rupees 5 lakh.
You saw now there is an increase in the value of the asset, right? So rupees 4,30,000 minus 1,07,500, that is for the year 2014-15 depreciation, will be around 3,22,500. Will be the book value on 31/3/15, or you can say that is the carrying amount of the asset. Now that has a value of, what is the value? 5 lakh is supposed to be the recoverable amount on 31/3/2015. But you cannot take the asset to 5 lakh because the standard is very clear. When I say standard, accounting standard 28 is very clear. They say that when you reverse an impairment loss, the reversal should not exceed or should not take the asset beyond or above its carrying amount had it not been tested for impairment earlier. What is the meaning? Now suppose had you not tested the asset for impairment on 31/3/2014, what would have been the value on 31/3/15 from 4,80,000? Remember that number? Minus another 1,20,000 depreciation for the year 14-15. How much you get? 3,60,000. That means if this is 3,22,500 carrying amount, you can take the asset only up to how much? 3,60,000. You want to take it to how much? 5 lakh rupee. Is that fine?
Yes.
So therefore, the reversal of impairment loss will be restricted to rupees 37,500. Is that clear?
Yes.
Yes.
Show how changes in the value of an asset to be treated in the books of accounts, assuming C Limited has the policy of writing down excess depreciation charge on revaluation to revaluation surplus account.
What is the meaning? This is from accounting standard 10. As per AS 10 on property, plant, equipment, you guys have a choice. The extra depreciation charged after revaluation increase, remember we got 1,20,000 in the year 2011, 12, 13, 14, I mean 12, 13, 13, 14. That extra 20,000 will be taken from revaluation reserve and will be transferred to revenue reserve. You should never credit your profit and loss account. Is that clear?
Yes, sir.
So that is a policy choice, an accounting policy. It's a choice given to the companies. Either they can take it to revenue reserve each year, or after 10 years, when the asset is removed from the books. There is a term for that. What is that? When the asset is de-recognized, at that point, the revaluation reserve will be transferred to revenue reserve. Is that fine?
Yes.
But here the company follows the other choice. Each year they'll transfer from revaluation reserve to revenue reserve. Yes.
Solution, sir?
Now we'll go to the solution. Just see the first table that is made. They'll show the revaluation increase. Okay, they will not show the accounting over there. The revaluation increase, and then the impairment loss, and the reversal impairment loss, what we discussed. Is that fine? Yes, the table.
Yes, sir. Calculation, cost of asset purchased on 1st April 2008, 10 lakh.
Yes.
Less depreciation for 3 years up to 31st March 2011, which is 3 years, 3 by 10 into 10 lakh.
Or
3
you can do 1 lakh per annum into
3 years.
into 3 years, 3 lakh rupees. How 1 lakh? 10 lakh rupees by 10 years is 1 lakh per annum. That into 3 years is 3 lakh. You subtract, so 7 lakh.
So carrying amount as on 31st March 2011 is 7 lakh.
Or you can say as on 1/4/2011. Then to this add.
Add upward revaluation as on the 1st April 2011 credited to revaluation reserve 1,40,000.
And don't bother, I'll give the journal for this later. 1,40,000 is taken to revaluation reserve account as on 1/4/2011.
Yeah.
In all 8 lakh.
So the carrying amount of the asset on 1st April 2011 is 8,40,000.
That is supposed to be the revalued amount or the fair value of the asset, right?
Yes.
As on 1/4/2011. From this again minus depreciation for the
For
next
3
3
years up to 31st March 2014.
Please make a note, 8,40,000 by 6 years, or rather 7 years left in the asset. 1,20,000 per annum for 3 years.
3,60,000.
Is 3,60,000 is subtract. What is the net amount?
4,80,000.
Is a carrying amount as on 31/3/2014. Next.
The next less impairment loss due to irrecoverable amount being 4,30,000, 50,000 loss.
50,000 impairment loss to be written off. Accounting will see later. And net amount is 4,30,000. Then
Less depreciation for 2014.
again
15.
notice this 4,30,000 by 4 years left in the asset 1,07,500,
500.
which is again 7,500 more than the original depreciation, right?
Yes, sir.
Then balance
3,22,500.
and then add a reversal of impairment loss. How much?
37,500.
In all 3,60,000 is supposed to be the assets carrying amount as on 31/3/2015. Is that fine? So far it is fine, the working. Now let's see the accounting treatment. Yes.
So they've made one statement for revaluation reserve.
Yes.
Statement showing revaluation reserve. Revaluation reserve credited on 1st April 1,40,000.
How much? 1,40,000. Let's see the entry for that, Renuka.
Yes, sir.
The handwritten. Just see the entry for 1/4/2011, where the asset is revalued upwards. It's called the fair value uplift. What is it called? Fair value uplift. And not a downward, it is what? An upward revaluation towards the sky. Okay. So what is the entry? It is a debit asset. Debit property, plant, equipment. And credit revaluation surplus, or you can say revaluation reserve. What is the amount? 1,40,000. Is that fine?
Yes, sir.
That is on 1/4/2011. Next.
Then next 31st March 2012, 13 and 14, we are supposed to do transfer the excess depreciation.
Exactly. What is that? That is 60,000 given. For that, what is the entry each year end? Revaluation reserve account debit each year 20,000. For 3 years, 60,000. To revenue reserve, also known as a general reserve. How much? Can we see the entry on the screen?
Yeah.
It is rupees 60,000 transferred. Again, go back to the printed. So what is the balance in revaluation reserve? It is 1,40,000 minus 60,000, 80,000.
80,000 available.
Then.
Yeah. Less impairment loss on 31st March 2014, 50,000 rupees.
Now, generally what happens, impairment loss on a non-revalued asset will be recognized as an expense in the statement of P&L. Is that fine? Impairment loss is generally charged to profit and loss account. But here, because we have a revaluation surplus, that's reserve, the impairment loss on a revalued asset will be debited to revaluation reserve account. Is that clear?
Yes.
Now just see the journal for that. Revaluation reserve, that is impairment loss account debit to asset, to property, plant and equipment. Now some authors will say, no sir, I want to create a provision for impairment loss account. You can create if you want to. Even writing off the asset is nothing wrong. Is that fine?
Yes.
Is impairment loss account debit to asset account, and then you should transfer the impairment loss, right? So instead of transferring to P&L, what I do? Revaluation reserve account debit to impairment loss. The amount is 50,000. But after minusing 50, what is the balance left? 30,000 is a balance in your revaluation reserve account as on 31/3/2015
14.
of 14 after Writing of the
Impairment loss.
impairment loss. I repeat, as on 31/3/14, this is the balance, 30,000. Next,
They also did the same, sir. After
Ah.
subtracting 50,000, reserve balance 30,000.
30,000. Next,
Then less depreciation charge for the year 2014-15, 7,000.
remember again excess, 1,07,500 minus 1 lakh. Therefore, again revaluation reserve account debit to revenue reserve 7,500.
Yeah.
After this entry, the balance will be 22,500 in your revaluation reserve account before you account for the impairment loss reversal. Is that fine?
Yes, sir.
I shouldn't say impairment gain. Impairment is a negative term. Got it?
Yes, sir.
So you say impairment loss reversal or reversal of impairment loss. Now, whenever there's a reversal of impairment loss, again generally what happens, the reversal is credited to profit and loss account. But here, because the impairment loss is initially debited to which account? Revaluation reserve account. Even the reversal should be credited to which account? Revaluation reserve. Is that clear?
Yes, sir.
Now, yes ma, next add.
Yeah, so what they did is add reversal of impairment 37,500. So the revaluation reserve balance is
60,000. Just see the journal for the 37,500.
Yeah, asset account. Or
Asset
P3
account,
debit.
increase the asset value by debiting 37,500. And to reversal of impairment loss, what you credit? You credit all incomes and gains, right? It's a gain. It is actually a gain. Yeah, because the asset value is increasing, right?
Yeah.
And then what is the next entry? You debit
Reversal of
impairment loss and credit revaluation reserve or surplus account. How much? 37,500. So what is the balance now? 60,000 is the balance. Is that clear?
Yes, sir.
A wonderful sum. Guys? Yes, ma. Then note.
Yes, sir. Then treatment of impairment
I think they've given a note regarding that 3,60,000. Yes.
Yeah. So reversal of impairment loss should not exceed the carrying amount that would have been determined net of depreciation. Has no impairment loss been recognized for the asset in prior accounting periods.
That means what? Had you not tested the asset for impairment on 31/3/14, you know, you had 4,80,000 asset.
Yes, sir.
Had it not been impaired, what would have been the value as on 31/3/15? Would have been 4,80,000 minus 1,20,000. How much? 3,60,000. How 1,20,000? 4,80,000 divided by 4 years would have been 1,20,000, right?
Yes, sir.
So you get 3,60,000. Yes, ma'am.
So first carrying amount 4,80,000 before impairment, less depreciation for the year 2014-15. It is 1,20,000.
Nothing but divide by 4, 1,20,000.
So carrying amount on 31st March 2015, 3,60,000.
60,000.
Then carrying amount as calculated after impairment, 3,22,500.
So that means 3,22,500 can be taken up to only 3,60,000. Is that fine?
The reversal of impairment to be transferred to revaluation surplus is 37,000.
37,500 rupees. People asking, what about the 3,60,000 and 5 lakh, the difference, right?
1,40,000.
That impairment gain or that reversal will not be recognized in your books.
It will be ignored. Impairment gain to be ignored. Recoverable amount 5 lakh, less carrying amount 3,60,000, so 1,40,000. Impairment gain to be ignored.
That's it. You shouldn't say impairment gain. The standard doesn't use the word impairment. But still, anyway, you can say the reversal impairment loss between 3,60,000 and 5 lakh can be ignored. Is that fine?
Yes, sir.
Now, can you write these three numbers, Renuka, on the screen? I'll just clarify this and we'll end the video. Okay.
Yes, sir.
Right at the bottom, 3,22,500. Right at the bottom.
Yeah.
Just above that, you write 3,60,000. And above that, you write
5 lakh.
5 lakh. Remember, this 3,22,500 can be taken only up to 3,60,000. You cannot take this amount to 5 lakh. Is that fine?
Yeah.
So the difference that only 37,500 reverse will be accounted, and please ignore 1,40,000. You call it impairment gain, or the reversal of that impairment loss will be ignored. Is that fine?
Yes, sir.
So that is all. So guys, that 1,40,000 impairment gain, or rather don't consider that at all. Don't even name it, okay? Just that 1,40,000 is ignored. Is that clear?
Yes, sir.
So guys, with that we complete this example. So learn this really well for your Jan 25 examination. Bye-bye.